If you ignore the historic $1.8 billion in liquidations currently sweeping the market, you risk losing your entire portfolio to a completely manufactured panic. But here's the twist. While retail investors are furiously dumping their bags, a record high of 332,230 whale wallets are secretly and aggressively accumulating behind the scenes. And for those of you watching right here in the US, the impending Clarity Act and the upcoming CPI data releases are about to dictate your financial future. By the end of this explainer, you're going to have the exact insider roadmap you need to survive and actually capitalize on June's extreme market volatility. Let's dive right into this market slaughter. $1.8 billion. That is the staggering amount of derivatives liquidations completely wiped out in a single 24-hour window. We're looking at a brutal downward correction where Bitcoin temporarily collapsed below that critical $60,000 mark for the first time since October. Now, this isn't just an organic pullback. It's being driven by a punishing 13-day spot ETF outflow streak that's drained $4.4 billion straight from the markets. On the surface, the data looks absolutely catastrophic. But there's a stark contradiction playing out right in front of us. On one hand, you have this massive narrative of retail panic, but while the average investor dumps their altcoins in sheer terror, smart money is making its move. We've hit an all-time record high of 332,230 whale wallets. These are specifically wallets holding over 10,000 XRP, and they've quietly and systematically accumulated tokens right in the absolute middle of this massive crash. They aren't panicking, they are buying the fear.
Section 1, the billion-dollar market slaughter, and Section 2, the shocking whale accumulation twist.
The real power dynamic in this market is rapidly shifting. XRP recently broke below its multi-month $1.28 defense line, plunging 18% to trade around $1.09. Now, from a technical standpoint, that is a steep downward trend. Yet, the whales have bought this dip so aggressively that they now control a massive 68.5% of the total circulating XRP supply. Think about that. They are locking down the network while the rest of the market literally runs for the exits.
So the absolutely crucial data point is right here, $118 million. This represents the surprisingly resilient net inflows directly into US spot XRP ETFs, which now hold over 1.3% of the total supply. It's a shocking divergence. Even on days when Bitcoin and Ethereum funds were bleeding heavily, these XRP ETFs continuously gained assets. We're seeing heavy institutional volume pouring in, completely disconnected from the dropping spot prices caused by the broader economic sell-off.
Listen closely. Please like, share, and subscribe to Crypto Global News. Seriously, if you're watching this without a subscription, you are missing the alerts that matter most. Click subscribe right now to stay on the timeline. It's completely free for you, but it gives me the motivation to keep making more explainers just like this so you never miss these critical market shifts. Do it now. Section 3, Crypto Giants Reframe the Panic.
MicroStrategy recently made a rare and highly controversial move by actually unloading 32 Bitcoin. This action alone tanked the company's shares by 18%. But Chairman Michael Saylor immediately stepped in to defend the move. He stated, "This is a capital rotation, not a Bitcoin impairment." His argument here is that these severe market outflows aren't an abandonment of crypto at all. Instead, liquidity is temporarily flowing into the booming traditional tech and AI sectors. For Saylor, it's a strategic shift, not a capitulation.
Then we have Barstool Sports founder Dave Portnoy. As Bitcoin and XRP experience these sharp declines, Portnoy openly admitted his massive losses, literally stating he has gotten whacked and hasn't made a cent. But he absolutely refuses to capitulate. He told his audience that digital assets are officially on sale. His conviction remains unshaken, and that's largely fueled by his discussions with Jack Dorsey, who is still fully convicted that Bitcoin is on a collision course with a $1 million valuation.
In the midst of all this, we witnessed a true anomaly. Arthur Brizzo, the elusive co-founder of the XRP ledger who has actively avoided the public eye for over a decade, broke a 14-year silence on X. The entire market basically stood still. He posted a single emoji. It instantly gathered millions of impressions, triggering so much panic and speculation that Ripple CTO David Schwartz had to publicly confirm it wasn't a hack. This kind of sudden, out-of-nowhere activity from an original creator hints at massive behind-the-scenes movements.
Meanwhile, Ethereum slid below $1,700 amidst a broader risk-off mood and some notable executive departures. Vitalik Buterin addressed the downturn with a clear ultimatum: stop chasing speculative engagement. He's calling it korposlop. He's demanding a migration away from global information war zones and toward decentralized platforms like Farcaster and Lens. He specifically stated that 2026 is the hard structural timeline we need to hit to take back our digital self-sovereignty.
Because these massive institutional shifts happen in the blink of an eye, you need to join our Telegram line right now. The link is right down below. Get the instant market alerts and real-time alpha before the rest of the market catches on. Section 4. Unseen exploits and protocol exits.
Now, the underlying damage here is catastrophic. Look at Zcash. It plummeted 50% after a critical exploit in its Orchard protocol was finally revealed. This exploit went completely undetected for 4 whole years and forced an emergency hard fork. Over in the Cardano ecosystem, ADA dropped over 16% following the shutdown of tap tools and ecosystem warnings straight from founder Charles Hoskinson. And WorldCoin suffered a severe hit, triggered by sudden executive abandonment.
Which brings us to this absolutely incredible contrast. On one side, we have BitMEX co-founder Arthur Hayes abruptly dumping his entire positions in Zcash and WorldCoin, totally cratering their prices on his way out. But on the other side of the aisle, major traditional finance institutions, giants like JP Morgan, Citi, and Bank of America, they aren't running away. They're aggressively building. They're launching a unified tokenized deposit network to rival private stablecoins. Think about that. The crypto insiders are exiting the flawed protocols, while the legacy banks build the future infrastructure.
Section 5. The US Regulatory Catalyst Roadmap. Now, before we reveal the timeline, I want you to get involved right now. Head over to our YouTube community post and cast your vote on whether you think this current market floor is going to hold or if it's going to break. Have your say.
At the very center of this regulatory timeline is the very public clash over the Clarity Act. Now, neutrally tracking this debate, you have JP Morgan CEO Jamie Dimon strongly warning of systemic financial risks. Matched directly against him is Coinbase CEO Brian Armstrong, who is aggressively pushing the bill forward to ease yield rewards. Make no mistake, this isn't just political theater. This specific legislation will dictate the global flow of institutional capital moving forward.
So, here's your high volatility window. Mark these dates down. June 10th brings the US CPI inflation print. Mid-June gives us the critical Federal Reserve FOMC meeting. And looming over all of this is the impending Clarity Act Senate vote. A passing vote here could officially classify assets like XRP as a digital commodity strictly under CFTC jurisdiction. That would entirely remove the regulatory gray areas that have been suppressing its price for years. And despite XRP teetering toward a critical $1 macro floor, the network ecosystem is plowing forward. They've just executed their standard 1 billion XRP escrow unlock. They've announced a core rebrand of the base network software to XRPLD, and this is all ahead of the massive version 3.2.0 framework upgrade. The underlying technology is advancing rapidly, completely regardless of the spot price action. So the ultimate question is, are you properly positioned for the Clarity Act shockwave? Because the volatility is only about to compound from here. I'm dropping an exclusive alpha breakdown of the CPI results next, and you absolutely need to see it before the market has a chance to react. Click the card on the screen right now to see the next move. I'll see you there.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.